Hello, and welcome to Fintech Insider Insights. I'm Kate Moody, Customer Strategy Director at 11FS. In today's episode, we're asking, can financial services change how people think about money? The way all of us use our money is incredibly complicated and often pretty squiggly. Spend, save, invest, borrow, lend, pay off. An account here for one thing, another service here offering something else. The user journeys in financial services are all over the shop. So, is it the responsibility of financial services to smooth out that journey and make it more simple and effective for consumers? And is the place of banks, fintechs, and others to help change how users prioritise and budget? If so, how would we go about it? In this show, we've put together a panel of amazing experts to discuss what the status quo for financial services looks like right now, how we can build more intuitive options, and what could the future look like for financial services. We will discuss all this and more in today's show. But first, a few brief messages. Don't go anywhere.
Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak, so sometimes you just need a quick human rundown of the biggest stories. Well, you are in luck. Bite-Sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-Size goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters.
Okay, let's get started. As always, I'm joined by a panel of outstanding guests who can shed some light on this question. First of all, it's great to be joined by Jason Bates, co-founder at 11FS. Thanks for being here, Jason. Can you give our newer listeners a reintroduction to you and your role at 11FS, please?
Hey there. Yeah, so I'm Deputy CEO here. I work a lot on the new product and proposition development that we do. I previously co-founded Starling and Monzo back in the day and have probably spent now best part of 8 or 9 years working for various banks and incumbents around the world, launching new propositions in Hong Kong, the US, Europe, Middle East, you name it.
Awesome, thanks very much. And we have a very exciting Fintech Insider debut for Stephen Bowe, Director of Digital Experience and Innovation at Nationwide. Welcome, Stephen. Great to have you with us. What should our audience know about you and your role at Nationwide, please?
Hey, Kate. Great to be here. Really looking forward to the conversation today. So, I'm the Director of Digital Experience and Innovation at Nationwide. I've been there for about 12 months, actually. It's my 1-year anniversary yesterday. Woohoo! I'm basically responsible for our digital banking channels, our internet banking, our mobile app, but I also look after our Future Ventures team, who leads some of our Horizon 2, Horizon 3 digital innovation work and a collaboration with a lot of the fintechs. So cue avalanche of DMs into my LinkedIn inbox, I suspect, after saying that. Maybe a couple of things about Nationwide. So obviously, a household name in UK financial services, a story going back about 140 years, the world's biggest mutual. But we actually consider ourselves a bit of a challenger to the status quo, trying to offer a different option to the incumbents. The traditional banks are kind of beholden to that kind of quarterly profit announcement, the drumbeat of giving shareholder returns. Whereas Nationwide, it's explicitly written into our constitution that we have to be there for the benefit of our customers. And so I think that's been something that's been quite difficult to make tangible historically. But with our most recent annual results, we launched the Nationwide Fairer Share, where we diverted a significant amount of our profits into the hands of our most engaged customers, £100 into their accounts. And that's something that we're incredibly proud of. And I think hopefully it makes some of those customers think differently about their money.
Yeah, no, it's been ever in the UK, so and definitely one for our international listeners to check out as well. So really looking forward to hearing your perspective, and thanks very much for joining us. And finally, it's a welcome return to Fintech Insider for Rajan Lakhani, Head of Public Relations at Plum. Welcome to the podcast, Rajan. What should our listeners know about you and Plum if they've not come across you already?
Hey everyone, and yeah, thanks for having me back. Plum is a smart money app that helps people to manage their money, whether it's saving, investing, budgeting, or managing their spending. What's different about Plum is we help people holistically manage their money, but also we help them do it through automation and AI. And I guess we might be talking about AI later on in the podcast as well. As you said, I head up PR and comms for Plum. And similarly to Stephen, actually, it's my 1 year anniversary this week at Plum and been in the fintech industry for almost 2 years.
Oh my days, we should have had cake or something. I feel bad now. Well, congrats to you both. So yeah, anyway, thank you all for joining. Super excited to get all your perspectives. So let's dive in. To kick things off, I'd like to look at, I suppose, how we got to the point that we're at today. So I suppose, Jason, I'll throw the big question to you first of all. How do people think about their money from your perspective?
I guess it's a story of two halves. There's how we're taught to think about our money by the banks, ultimately, and that's through financial products. You have a current account, you have a credit card, you have a mortgage. These are all financial instruments that are manufactured by some bank somewhere and then distributed, as they would say, through a variety of channels, through letters, through the branch, through the digital app. And so, to a certain extent, we've been taught how to think about money in a formal way by what the financial product is behind it. But of course, then there's the reality, the kind of day-to-day job of I get paid a salary, it goes into an account. Actually, I split a good portion of that off into my Monzo card, and that's my fund money. I put some into savings, I pay some debts, mortgage. And so there's that whole dance, both at a day-to-day, a month-to-month, and a year-to-year level, where I use a variety of people and providers and little personal hacks. So in the work we've done at 11FS, sort of working on propositions, we've interviewed hundreds of people, and they have the most bizarre and idiosyncratic ways of trying to make all of that work. And so, yeah, there really are two levels to this. There are the financial products we use and piece together in weird ways, and then there are the ways we actually do it to try and make money work in our life.
Absolutely. Stephen, obviously, Jason's referred to like the products and instruments that banks offer. Nationwide obviously has most of those, if not all of them, on their books. How difficult can it be when you have that broad an offering to connect customers from one service to another?
Yeah, so I think as an industry, we've made huge steps towards digitising banking. So I think today you can go online, you can make most transactions that you need to manage your money. The experience associated with an individual service request is pretty slick. I think you can expect in many cases to receive a pretty personalised service, even if that's through messaging or next best offer and things like that. You might even expect to be connected with a set of third-party solutions that kind of create tangential value. So I think, we're all more connected to our money than ever before, and it's easier to manage. However, one of my reflections, and I've been abroad for the last 15 years and recently returned, actually coming back to the UK, that whilst I can do transactionally what I need, actually managing my money around my life, it's as hard as ever. So I think our journey to really digital banking and banking that fits my life is kind of still in the early stages, and we've got a long way to go on it.
Rajan, what's your perspective? Where do you think we're at today?
It's a challenging one when it comes to the different services available. I think ultimately it comes down to what people are aware of, and they might be used to doing one particular type of financial services that they know and trust and have been doing for some time, whether that's saving, and then because they become so used to that and have learned to trust that, then they stick with that. But actually, over the longer term, making their money work harder through investing is another option for them. So it's I think the big challenge more generally is awareness and education, and giving customers the insight that they need to be able to make good decisions about how they manage their money and the different options that are available to them. And I think this is where I think fintechs have made a big difference in popularizing some of these different areas. So we've seen over the last 3 years in particular how investing has changed and become a lot more popular. And of course there were trends going on that encouraged that, whether that was through lockdown and people having more money and more time to dedicate into investing. Also, those investment platforms were able to offer investing at a commission-free price, but also they presented investing in a different way as well. So I think there is a real opportunity to give customers more information around the different services that are available, but also connecting all the dots, saying saving is good in this area, but actually investing might be the right thing for you if you're looking towards the longer term. So they've got more information to be able to make their money work harder.
Yeah, I mean, Jason, obviously you talked about, we have done hundreds, maybe even like thousands of interviews over like the multiple years of doing our work at 11FS. I suppose we are in you think just like the here and now, like we're in a particularly challenging economic time. What changes are you seeing to kind of those traditional money management strategies, or how people are behaving with their money at this point in time? Obviously, Rajan alluded to the impact of investing behaviours and things like that during the COVID pandemic, but what are you seeing more generally?
Well, it's just a broad range of responses. Some people are amazingly great at managing their money. Maybe 2 to 5% of the population are just crazy anal at managing every possible transaction. Pivot charts, tables, Excel spreadsheets, you name it, they're on it. And they're opening new accounts to get the teaser rate, creating rotating direct debits, like they're all over it. The majority of us are not like that. There's a mid part of the population that probably do enough to get through. And as the cost of living crisis continues, and as the utility bills spiral and grocery and food inflation comes into play, then people are getting squeezed, and they're starting to really have to say, well, where is my money going, and how can I use it? And then there's also a reasonably sizable proportion of people who are just atrocious at managing their money and basically run out halfway through the month, are into credit cards or into overdrafts. And, when they get the red letter, then they'll do something about it. But I don't actually think it's about information. I think there's a behavior, there's a psychology, there's a lot around, as you know, Kate, or with all the interviews you do. There's something more than actually giving the people education, because it's all out there. I mean, if you really want to know how to manage your money, there's more than enough information, guidance, textbooks, books, YouTube videos, TikTok on how to do it. But still, most people aren't doing it very effectively.
So maybe I could just add to that, because I think, probably actually we've got an audience that has a skew to a real interest in managing money, but also just kind of in fintech and banking solutions. And so we might be kind of talking a little bit to an echo chamber, but that doesn't represent like kind of the majority of people. When I was in New Zealand, Bank of New Zealand had this kind of mission around helping customers be good with money. And the insights behind that was that 86% of Kiwis thought being good with money was important. So I'm not sure about the other 14%. But 94% of Kiwis didn't think they were good with money. And I suppose that's a bit of a damning indictment to, if that's what your bank is there to do, is to help you manage your money. And so many people feel they're not able to achieve that. But I think part of that is, it's not that they're necessarily bad at managing their money, but everyone thinks that they could do better. We don't have that context to how well you're doing. Obviously, 94% of people aren't bad. They just could improve what they're doing. I think part of it also comes down to apathy. A lot of people think that improving their financial situation is going to take a massive amount of effort, and actually the outcome isn't going to be that significant. And for many people, actually the reverse is true. And actually a little bit of effort can lead to profound improvements in your financial situation. Just some basic budget management can help you increase your focus on what is most important to you. I think banking solutions actually still continue to make that quite hard, and that's something that we've kind of got to try and improve, I think, as we move forward.
Yeah, that makes a ton of sense. I'm always amazed, like when we tend to do our research at 11FS like one-to-one, like because obviously like finance is hugely personal, and we spend maybe like an hour with somebody like just really trying to unpick like the in most instances like the chaos of their financial lives. And I'm always amazed, like at pretty much the end of every single conversation that I have with someone, people ask me like am I doing okay? Like, do other people do this like me? Am I alone? Like, am I making mistakes? There's this kind of like this profound residual anxiety, I think, in the population, as you alluded to, Stephen. So
if I could just add on this, I think that those are really good points there, because where Plum come at it is, there is that desire for everyone, right, to do better with their money, as we were just hearing, but people just don't know where to start, or they don't have the time to manage the money. There's there's so many things for, particularly your family and kids, finding the time to manage your money can be really tough. And I think where Plum come at it, and I'm sure other fintechs are thinking similarly, is not necessarily going, okay, it is more about providing more education, providing more information, which is useful. But what's important is actually using tools as technology is developing to make it easier for people to manage their finances. And that's why, we use automation and AI to make it easier for people to set up saving rules and put money aside. And a lot of our customers will tell us, look, I never thought I could save, or I never thought I could save that much. It was really hard. But when I started using your app, I could find I was saving a lot more, and it wasn't affecting my daily spending in any significant way. So I think there's a lot of tools now available to financial services to make it a lot easier for people to take advantage of the different financial options that are available to them. And you're absolutely right. I think it is a behavioural change, and companies have a key role in helping people to make the most of their money.
But I guess that's a great point you bring up. How you're talking about it, what you're thinking about is really about improving the end customer's financial situation. But there's a lot of executives at a bank who would say, that's not our job. Our job is to keep your money safe, to move it when you want it moved, to tell you where it is, to give you a good interest rate. We sell financial products that use maturity transformation and traditional sort of banking mechanics to do great things for people. But we don't do all of that work. Like, we have branches and staff and people who create and sell these products that are vital utilities. And that's the difference. I think, we often talk about this move that digital is really driving a move from commodity dumb products to intelligent services, because not only can it deliver cost savings for banks, but actually it can deliver 10 times better service. But that's a very different operating model. It's a very different reason to be, I guess, than the traditional bank approach. And that's also added to by the fact that if you don't manage your money well, actually banks do pretty well out of it, because they make their money by lending by and large. And if you suddenly need to borrow, then, there's always that rub that customers, clients who aren't great with their money can be profitable in some ways.
Hello, overdrafts. Yeah, no, absolutely. Okay, well, we've done a good, I think, deep dive into, I suppose, some of the status quo and kind of where the challenges and pain points are. I'd love to kind of get all your perspectives on what we think the opportunities and potential challenges of this more intuitive financial services model could look like. So, Jason, we talk a lot at 11FS about intuitive financial services. What do we mean? How does this look in practice?
Again, there are probably a couple of ways of looking at this. One is, how did your gran and granddad manage their money? Way back in the day, granddad comes home with a pay packet. He's got the gas bill to pay and the kids to feed and all of that kind of stuff. How did they do it without spreadsheets and notebooks and everything else? And so people thought about it in different ways. There was a lot of envelope budgeting. You get the little set of envelopes out and put some money aside for different things. Granddad gets his pocket money so he can go off down the pub. I'm painting some really bizarre, northern, 1950s pastiche here. But bear with me. But people have been doing this for a super long time, and they come up with and reinvent, if you like, the same kind of mechanics and ways of doing things. Now, fast forward a few hundred years, by Grandad, and enter Richard Thaler, behavioural economist. Behavioural economics always fascinates me because it was basically the failure of economics that led them to look to psychology. And so then you say, well, he gets a Nobel Prize. He comes up with mental accounting, which is really just a way of talking about Grandad and Grandma's envelope budgeting and the biases that we have. So I think what we're talking about here is whether you're talking about Richard Thaler's behavioural economics, whether you're talking about envelope budgeting, 50, 30, 20, zero cash budgeting, whatever the method is, people have these ways that it makes it simpler for them to think about and act on their finances. And those approaches are not mirrored in the financial products that they have to use day to day.
Stephen, how do you approach that kind of more intuitive model in a traditional banking setting?
Well, being from Nationwide, I think I have to mention the first thing you do is you put a card reader in front of whatever transaction that you're trying to make. Like, I couldn't come on this podcast and not make mention of that. Look, I would like to reassure to any listeners that this is our number one priority to remove from our kind of intuitive experience. So we are making huge progress on that, and hopefully we'll have some solutions out in the market pretty quickly. I think more generally, the challenges that big banks have is the way we think about banking is a reflection of our kind of system thinking, and we almost have just kind of digitized the ledger system and put an accounting like front end, and that's what it looks like. It just looks like an account and debits and credits in there, and hence it's all about the way that we think about money replicated online. That's not the way that customers think about money. They think about it around the purposes that they have for their money. And I suppose what online banking therefore often becomes is taking a set of products or transactions and shoehorning them into the interface, rather than kind of an outside in thinking, which is like, how are customers thinking about their money, and then how can you reverse engineer all the way back through the back end systems and processes and policies that actually you build products that elevate the experience that customers are thinking about.
Yeah, absolutely. Rajan, I suppose you talked earlier about how you think some of the reasons why fintechs have been successful to date has been because they've not necessarily been constrained in that way. I suppose, do you think, from your perspective at Plum, like, should financial services be looking to shape and change consumer behaviour, or should they be being shaped by consumer behaviour?
I think we've got to start with where consumers are at, and I think that's a error that a number of financial services organisations make. And going back to the discussion earlier, I think there's this idea that people can be educated into all of a sudden being able to make the right financial decisions, and going to the point that Jason was making around behavioural economics, that that isn't the case. And people will make choices that may seem on the surface not completely logical to their own interests. So I think starting with where the customer is at and using those insights from behavioural economics are important. And I think we've seen how successful that's been with what's happened with pensions and the change there, through to ensuring that people are opted in and they start off with a particular percentage that their company provide, and they make a particular contribution as well. And that's helped to grow a culture of pension saving, and more people are likely to have a more stable retirement as a result. So I think starting with where customers are is absolutely key. And then once you do that, then I think there is the opportunity to then work with them to take them into different directions that are suitable for their own circumstances, so they can grow their financial resilience and truly reach their potential with their finances. So I think there is that evolution that comes with working and being customers of some of these forward-thinking financial apps, but ultimately it's got to start with where the customer's at.
Jason, obviously a key part of this, if we were to move to this more intuitive financial system, away from kind of that more product or instrument-led approach, that's going to require change from organisations, but it's also going to require change from consumers as well, right? And we know how difficult it is to motivate consumers to change. So what do you think would be the kind of the key challenges of moving customers over to these kinds of services, even if they did exist?
Well, I think the danger is that you say, look, we've got this amazing financial system with all of these accounts and things set up and budgetary tools, and you take one look at it, and to Stephen's point, you just think, well, there's no way I can't find the time, or maybe I'll do it next Wednesday and just never get around to it. So there is something about, behavioural change being about low friction, small steps. People have fallen out of love with gamification, but it really is a sort of behavioural change aspect to it, which is that you ask for small steps to create rewarding outcomes for consumers. To Rajan's point, suddenly we say to you, hey, Rajan, thanks for logging into the bank. Look, if you, the most successful people managing their personal finances save 10% of their salary, click on the button and we'll open you a savings account. We're going to put 10% aside, just like your pension. You won't know it's there. You can always access it. Or actually, I would argue that the early success of Monzo in its growth was really due to the fact that it's allowed people to separate out discretionary funds from their bills money. So, suddenly people would get their salary and load up their Monzo or Revolut or Starling, or one of those challenger bank cards, be able to see and track and know that they weren't spending their rent or their utility bills or whatever they were putting aside. So I think the changes that we're talking about are not amazingly sophisticated. Just small behavioural changes can be threaded together to make big outcomes. And it's also not something we're inventing here either, because when you actually go out and talk to people, they'll tell you, they'll draw out like how their money flows and how they've managed to kind of make it work for them if they're at all functional in how they go. So I think that's really the key, that it has to be small steps, it has to come with rewards, and it has to build into something that's not so complicated. Because really, I'm not going to sit there and categorize every transaction into one of 15 categories to work out that I spend 7.5% of my income on transport.
Are you not? Oh, that's very, very lazy. Geez. I guess, Rajan, now you guys, we've got different perspectives in the room of, I suppose, Stephen, Nationwide, like a bank that's got kind of all these services and is just kind of working out how to kind of bring those together cohesively, versus fintechs that, are starting normally in one space and then adding extra products as you go. How do you kind of manage that consumer behavior change when you launch something new? How do you encourage people to try out your new products and features in a way that kind of makes sense?
So I think from the very start, Plum's ambition has always been to help people holistically with their finances. So, began as a, chatbot helping people with their savings, and then evolved into helping them with their investments, and then became a fully fledged app supporting them with savings, budgeting, investing, and managing their spending. Because I think it's a challenge for people to compartmentalize into different aspects of their finance, and helping them manage their money in one place is really important. And that's what our app's been able to do. And I think it ultimately goes towards just making those links between those different areas. People might potentially start with saving and putting some money aside, which is a really good start, because that's helping them build that emergency fund and helping them build their financial resilience, which is, very, very important in the current climate with cost of living challenges. And then when they've got that emergency fund and they've built that resilience, then they may want to consider looking at investing and helping the extra money they have, once they've settled their debt and they've got that emergency money aside, they can then consider looking at investing to grow their money over the long term. And also their circumstances may change. If they become a parent, they'll be wanting to think about saving and investing for their children. So it's very much around working intuitively with the customer and seeing how their circumstances are changing, what they're able to do in terms of their personal finances, and offering solutions as those circumstances or as their financial position changes. One thing I think financial or fintechs or more general financial service companies need to be wary of is just that danger of overawing people with too much information, and then they become intimidated. And I think you might, if we take like a smaller example of it, a more targeted example, is probably with some of the investment platforms, where if someone is new to investing, they're almost presented with this, gazillion choices of different funds and stocks to invest in. And they go, okay, I don't know where to start. I was already concerned about investing. It's too much risk. This is too intimidating. I'm out. And I think where financial services have got the opportunity now is, yes, there is more that they can offer and do more things, but presenting it at the right time in the right way is arguably even more important.
Absolutely. Okay, we're just going to take a quick pause here. We'll be back very shortly.
A lot of you know 11FS for our chart-topping podcasts, our events, videos, reports, and a bunch of other cool stuff that we do. But what a lot of you don't know is that this is just all our side hustle. We do so much more than that. At 11FS Ventures, we're partnering with ambitious businesses around the world to design, build, and launch truly digital financial services. We are building banks, shaping new propositions, and growing existing offerings that change the fabric of financial services. And our design, research, strategy and engineering experts are working to improve your customer's relationship with money. To find out a little bit more, check us out at 11fs.com/ventures.
Okay, having looked at what we mean by intuitive financial services, let's have a look at what we think the future might hold. In a perfect world, Jason, with all the regulation, technology falling into place, come on, we can go wild here. Like, what does a world-class intuitive financial services product look like?
I think the North Star is that it's private banking for the mass market. It's a family office for the mass market. It's basically the kind of thing that you would expect if you had a gazillion pounds and you had a team of people looking after you. It just separates out your money in the way that you think about it. It lets you know where you are all the time, and it helps you actually make the right decisions, both day to day, month to month, and then more broadly, year to year, decade to decade, leaving stuff for your kids. But it just builds it up like a nice warm cocoon that's just shaping you away, like some Swiss private banker in your pocket.
Stephen, what's the dream in your head?
Yeah, I mean, I think technology's obviously got a really important part to play in this journey. And so I think your mobile phone eventually will become a financial concierge in your pocket, looking after your finances 24/7, looking after every single permutation and giving you insights into how you can optimize things, making sure that you're catching your blind spots and really almost elevating everyone to having a private banker status. But I also think there's some really simple things that we can do going forward. I mean, one of the exercises myself and the team did when we were in New Zealand, we asked customers to draw their money. And when you ask customers to do that, it's quite interesting. They look at you somewhat puzzled and wonder what you're talking about. But they give it a go, and you start to see a number of trends kind of emerge. And what they do is that they don't draw a bank account. They certainly don't draw digital banking. What they do is they'll draw a number of pots, like squares, circles, and those represent sort of objectives that they have in their lives. And I think that's not just kind of savings goals. It's like all sorts of different purposes and like specific to individuals. But then around that, they'll draw people, friends, family, work. They might draw the bank, places they go shopping. That kind of represents a financial network that they operate in. Then across that, they'll draw flows of money, or like arrows, and those represent flows of money. And I think what we need to try and do is not just kind of bring to life products online, but actually experiences online, those mental maps that people have of their money that can be personalised to whatever that situation that they have and they find important. And then we can put like experiences on top of that. One of the things that Nationwide have done previously, which was really successful, was like payday, save day, which is like, so make sure you pay yourself first. So like a savings account is important, but an interest rate, all it does is it's a tailwind to you hitting your goals. The only way you're going to hit your goals is by saving a greater proportion of your income to whatever is important to you. So if you can do that first, then you're more likely to do the things that are more important to you. And so I think it's bringing that combination of really seamless structure and quite advanced technology to the mass market.
Absolutely. Rajan, I suppose if we manage to move to a future with these kinds of more intuitive systems, what are some of the kind of bigger societal issues that you think you'd love to see Plum tackling or other people in the industry tackling? Is it debt, access to credit, and people just being in the system full stop? Like what are the kind of biggest issues that you guys would like to play a part in solving?
Yeah, there's huge, I think, potential there. I think beginning with one more directly related to Plum is around investing. We really want to help people make their money work harder over the long term, and the FCA describes long term at least 5 years. So we want people to be looking at investing with that, at least that time horizon in mind. And I think what we're seeing is people looking at investing as a potential way to make their savings, work harder. So at the moment, with what's going on in various countries with interest rates, the Bank of England recently raised their rates to 5%. Yet they're finding with a number of high street banks, those rates haven't similarly gone up. They remained for some easy access accounts at 1%, 1.5%, and you could argue in an indirect way that's actually potentially contributing to not reducing the rate of inflation, because having a lower interest rate on savings might encourage people to be spending more. So, we're seeing a number of fintechs being very competitive in terms of interest rate offerings, but also being innovative in this space. We're seeing, like I said, with investing, the popularity of money market funds in particular in the US with what's happened with some of the banking turmoil there. And that offering people that opportunity to earn a return that's far more sensitive to the Bank of England rate, and we're seeing organisations like us and others exploring that and helping people to get a higher return in a low risk way, and finding one that's much closer to the Bank of England rate. So I think there's one which is around investing and showing kind of the potential that's there, but more generally around beyond helping people to make their money work harder. I think financial inclusion is a big one in how the innovations that we're seeing could really helping people to connect digitally and making it far more easy, and removing that friction is absolutely key. But also on credit building as well. I think Jason mentioned earlier this opportunity to categorize different transactions, and actually some of those transactions may be decent predictors about how creditworthy someone is. And we've seen institutions now beginning to look at that data and saying, okay, let's find a way of using open banking, using that analysis, and saying, right, because you're spending more in XYZ, rather than using the traditional methods of working out someone's creditworthiness, we could add these new technologies in to help people access credit and show and improve their credit rating as well. So I think with the increased information that's out there and new technology, and particularly I think with AI, that's another big opportunity in terms of access to credit.
Yeah, I suppose we couldn't go through the episode without, I suppose, touching on AI. Jason, like, how much of this future system is dependent on AI being leveraged in the right ways?
I think as Stephen pointed out, there's a lot we can do now. I mean, there's massive changes that we could make to the financial well-being of the country, the world, through relatively simple approaches and using behavioural science in order to help people do better. Of course, AI is great at decision making. You know, you only have to play with ChatGPT for a while to see that obviously it could be that Swiss private banker looking at where to put your money and how to manage it. But do we need that in order to make it work? No. Will there be people training models on personal finance? Yeah, I think Nude just launched something today with Copilot. I think you were mentioning that, is it Wealthsimple do something very similar? It's not going to be long before, you rather than going to a financial advisor, that you could ask ChatGPT what you should be doing different and how to manage that. Here's my bank statement. How should I do that? Now, of course, from a regulatory perspective, that's a nightmare. And we get into the sort of advice, guidance, and how does that apply to large language models? But it may lead to some significant changes in the future. But there's a lot we can do now.
I think one of the things that we've got to be quite careful of with AI is that we don't kind of actually exacerbate the kind of gap between the haves and have-nots. The people who are kind of really willing to adopt this technology and have AI advise them on their finances are probably going to do better. But when I kind of think of, even just say my parents and trying to persuade them to use mobile banking, which I do consistently, how willing are they going to be to have an app that then kind of makes all sorts of financial advice for them and them getting comfortable with that? But if they don't, their ability to kind of make their money work as hard as it can do is it's just not realistic. And so actually I think we have to find ways of making AI accessible for everyone, not just kind of the people who are tech literate and more comfortable with it.
Yeah, absolutely. Okay, we're sadly, I could chat about this all day, but we're sadly getting towards the tail end of the show. So I suppose just wanted to bring it back to the question that we asked right at the top of the show, really. Rajan, can financial services change how people think about money?
Yeah, definitely. I think, and that opportunity, I think, is growing even more with how we're seeing technology evolving and particularly with the potential of AI.
Stephen, what do you reckon?
I think we can, and I think it's important that they do. But I think probably even more important is that banks, building societies and fintechs are really thinking about the customers and actually making sure that their products and services reflect the way that customers think about their money, not just the way that we kind of process it on an accounting ledger.
And Jason, I'll give you the last shout. What do you reckon?
I think they have to. The question is who in that market will do it. Does it have to be banks, or can it be a variety of service providers that layer on top through open banking, open finance? because delivering these intelligent, intuitive services is a very different business from managing, creating, distributing financial products. So the question is, will banks step up to that plate or not?
That's the question, yeah, for sure. Okay, that wraps up today's discussion. Thank you so much for joining us. Where can people find out more about you and your companies? Jason, you can go first.
You can find me on LinkedIn, Jason Bates.
Awesome. Rajan?
So you can find out more about Plum at withplum.com, and you can find us in the App Store and Android Play Store as well.
Awesome. And Stephen, what about you?
Yeah, same. I'm on LinkedIn, so but not great at checking my DMs.
Oh no, that's not going to be great for these fintechs. They're going to be spammy. Dear Jerry. Okay. And you can find me on LinkedIn as well, Kate Moody, or you can drop me an email at kate@11fest.com. Thank you so much for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and it helps others to find this show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thanks very much. Goodbye.